Good afternoon, I'm Michael Hutchinson. You're watching Community Leader Live in association with our good friends at crowdsourcing.org. We're broadcasting from Minneapolis, and our studio audience today is made up of big and small business owners, all proud Minnesotans. Thank you for being here. I got a chance to talk with several of you, and here's a common theme you shared. Number one, regardless of the economic conditions, and yes, your politics, every one of you said you need access to capital to grow your business. And number two, you need smart people around you to assist in making good decisions. Has everyone heard of Warren Buffett? You know, Jimmy's brother. Well, he says it best. Your financial future will largely be determined by two factors: the people that you choose to connect with and the systems that you choose for success. I think we can all agree that there's a massive demand for capital, especially among emerging businesses. Today we're going to discuss a solution for our sinking economy. One possible solution involves the recently passed JOBS Act. JOBS stands for Jumpstart Our Business Startups Act. Specifically, this legislation has created a new fundraising option that allows small businesses, you and I, to sell up to $1 million of stock or securities to the general public through a process known as crowdfunding. What is crowdfunding, you ask? In layman's terms, crowdfunding is getting a group of individuals, as opposed to venture capitalists or angel investors, to collectively fund your venture through the sale of equity. The new law allows entrepreneurs and business owners to utilize the power of the internet, email marketing, social media such as LinkedIn, Facebook, and Twitter to raise up to $1 million of capital by selling company stock directly to the general public. This is so important. The crowdfunding platforms are divided into 4 subcategories. And while it's worth learning about each of them individually, today we're only going to focus on equity-based crowdfunding. Others include lending-based crowdfunding, reward-based crowdfunding, and donation-based crowdfunding. All of these are great options and are not mutually exclusive. I believe equity-based crowdfunding will be one of the most booming and emerging vehicles to access capital. And there are literally thousands of people asking questions. They want to know if they're going to get involved and what is it going to take to succeed. It's so important to get educated and to get all your questions answered and begin the process now of preparing your business. And that's why we're here today. To better understand these issues, I'm pleased that we'll be talking with my colleagues and fellow founding principals of Community Leader. Full disclosure, I'm a proud partner of this team. This is a very smart group of folks, and how I got included with this group is the real question. To my left is Jennifer Amos. Jennifer is our Chief Information Officer and the former CIO at C.H. Robinson. She held the same CIO leadership role at Rockwell Automation, and she's also the founder of several technology companies. And to my right is Joseph Ferrazanzi. Joseph's our CEO. He's an inspiring leader who has an unmatched passion for the connection of business development and community. His vision for a crowdfunding platform that connects local business and investors is currently a leading voice in the industry. Rick Weintraub is our Chief Compliance Officer. Rick is an attorney, and he has extensive experience in the negotiation and structuring of hundreds of business transactions. Scott Bachman is our Chief Marketing Officer. Scott has over 25 years experience as a printer, publisher, marketer, and business development consultant focused on building distribution and revenue models for small businesses. Scott, Jennifer, Joseph, Rick, welcome. It's great to have us all together. Jennifer, I'm going to start with you. You've built and sold several businesses. What role do entrepreneurs play in our nation's economy?
Hutch, as you know, small businesses, entrepreneurships, probably supports about half of the U.S. economies. Payroll-wise, probably about 44%, while supporting about 64% of employment. GDP-wise, small business and entrepreneurship companies have about 50% or provides about 50% of GDP. So small business and entrepreneurship is very, very important as far as America goes.
Rick, tell us about the intent of the legislation that was passed in April.
Well, to get the true intent, you have to look back to September 2008, and when we had probably the second biggest financial collapse in our history. And When that occurred, even though there was a tremendous amount of money out there held by venture capitalists, angel investors, private equity groups, they have been very reluctant to release that money. And therefore, because of banking conditions, because of those conditions, because of lack of SBA funding, there has been very little funding of small businesses. With the crowdfunding legislation, it gives companies the ability to raise up to $1 million in a 12-month period from the internet, through social media, from investors that normally would not have access to investment. It was passed on April 5th of this year. In the legislation, it says the SEC is supposed to promulgate regulations within 270 days, which brings us to early January.
How does equity-based crowdfunding work? And specifically, what I'd like you to address is what type of companies would best qualify for a raise? Number one, two-part question. And the second question would be when? When would be the best time for a business to access the crowd?
Any business has an opportunity to do a successful crowd fundraise. And there's an awful lot of talk and excitement about startups, and lots of startups. It's going to be a great opportunity. The other type of company, or mutually inclusive in that, is companies that have a really solid base of support. I call it their community. It'll be their suppliers, their vendors who have a vested interest in their success. It'll be their community, their geographic or affinity community that would really like to see them grow, like to see them add a second store or another restaurant. So those are the companies. When they do a crowd fundraise, it'll be at the time that they say, it's time for me to grow. I'm looking for growth capital. And they'll start considering, is it right for me? Is it right for my business? And where does crowdfunding fit in? You mentioned that it's not mutually exclusive, all of the different options. And as we talk to the beta customers that we've brought on to the Community Leader platform already, what we're finding is that they want to use crowdfunding as a strategic and a blended solution with their overall capital strategy.
You mentioned community a couple times. Is there a difference between community-based crowdfunding and crowdfunding individually?
You know, I've been talking about community for a long time, haven't I? And we named the company Community because we really think that while the crowd's a pretty exciting place, and there's a lot of opportunities and options in the crowd, it can also be a pretty scary place. And as a small business owner, we don't really necessarily want to be owned by the crowd. We're not ready to have the crowd as a partner. But we do have an opportunity in the community. So for our company, our target is to focus on, within that crowd, the community of people who know your business, who already support you, like you, have an affinity interest in seeing your business grow, and really nurturing that place in that space. I come out of Main Street business development and urban community development, and I'm excited every day to talk to small businesses on the main streets of small towns that are not going to attract the fancy Wall Street money, aren't going to attract the Silicon Valley on the next Facebook money, but they need to be able to grow their Main Street business. To me, that's the community of businesses we're here to support.
You know, communities, it strikes me as being regional, being local, but when we're talking about community-based crowdfunding, we are not limited either to local or regional, right?
Absolutely. You know, one of the exciting things about the internet is it taught us about what's called the long tail of marketing. You know, and that the internet's been able to aggregate these previously niche markets up to scale. So I may create the you know, the thinking about the beta businesses that have applied, the company that makes the perfect cooler for home-based brewers that are making home brew beer. You know, yeah, there might be 3 or 4 of those people in each geographic community, but scale that up nationally, and you've got a real market. So when we talk about community, it's not just those geographic, it's that cross-section, those affinity communities that can come to scale with the power of the internet, and now have an opportunity to fund emerging growth businesses in those niche or affinity communities.
And Scott, you're a proven entrepreneur, and you're in and out of businesses every day. But when you look back at your career, did you self-fund any of your businesses?
Well, Hutch, I self-funded all my businesses. It's always been that way. And you know, I have to admit that 25 years ago it was a lot easier to get capital. I mean, I actually started a large print plant and publishing company in Minneapolis here, and I walked into the bank and said I wanted some equipment, I wanted a building, and immediately they loaned me $3 million. And I mean, it was relatively easy on my signature because they had assets. I mean, I can't imagine somebody walking in there with, you know, basically no money down doing that today. So I mean, it's a different world. There's no doubt about it here. And now that I've shifted to Silicon Valley and I see hundreds and hundreds of companies every day looking for money, and you know, the challenge is very simple. People don't give you money unless you're ready to go to market. They don't want to invest in R&D anymore. They don't want to invest in, you know, past debts and past bills. You got to be ready to go to market. And if you're ready to go to market and you got a good product, you need capital, and they'll help you scale. And that's the biggest difference in today's world, I believe.
Got it. Got it. Joseph, I remember reading historically that 1 out of 4 entrepreneurs doesn't attempt to raise money because of the fear of rejection. How will equity-based crowdfunding address this mindset for business owners?
I'm not sure that it'll be any less scary. I'm sure being shut down by your community would be a scary thing as well. But I do think that it's a different story. I don't think that the that, you know, filling out and having to translate my business into a form that gets submitted and feeling like I'm leaving so much of myself at the door feels good for a lot of entrepreneurs. It's like I want to fill in the spaces between the lines of the form, or, you know, I think about a lot of the pitches that we've done together in front of venture capital firms and angel investors. It's like Shark Tank. They want to drag you down and break you down and see if they can just turn you into mush before they take over half of your business. You know, that's a pretty scary place for entrepreneurs, where the crowd and the supportive community is going to be such a different feel, such a different look of a space. These are people who are going to like your business, who are excited about the opportunity to support you. It doesn't mean there still doesn't need to be the discipline and the right questions being asked, and we need to make sure that the accredited platforms like CommunityLeader support that discipline, both from the investor and the business side, but it's going to be a much different feel. And I believe that the businesses are going to find a much more welcoming and embracing space, and correspondingly the word will go from business owner to business owner that this is a much more viable way to get those small amounts of strategic money which can leverage the other opportunities.
And from your experience, how important is it to be perceived properly in front of an investor or a group of investors?
Oh, it's essential, right? It's your ability to tell that story in a way that matches the investor. And what's going to be great about the crowdfunding platform is that there's going to be standardized vehicles or standardized forms, standardized, this is the intro vehicle or the intro video, this is the overview sheet, you know, kind of like you think about the nutritional label on the side of the you know, food. This is what I get to look at so that I understand what's been put in this cereal box. There'll be those types of things to make it easier for the unaccredited investor to quickly grasp. But I think that that presentation packet will allow that perception to happen to the community.
What are some specific strategies to reduce risk when raising capital?
Well, I think before I answer that, you have to look at what the landscape is in raising money prior to crowdfunding. And there's 2 problems that we have encountered in the last couple of years. One is, of course, the only exemption that we had was Reg D and Rule 506. Right. Reg D and 506 limited you to 35 non-accredited investors. Exactly. And which means you had an unlimited number of accredited investors, but the definition was changed in the Dodd-Frank Act in July of 2010, which basically said you have to have a net worth of at least $1 million, not including the equity in your home. Everybody, all Californians for instance, of course included equity in their home to qualify as accredited investors. So all of a sudden you have all these people who are not accredited investors, they don't have access to investment. The other thing is that you had a problem with people selling investments. There's been a clamor through the investment community for many years to allow certain types of intermediaries to match investors with companies. Right. And because of that, there's a movement for this particular act. Before that, you were dealing with whether or not someone was a licensed broker-dealer or an unregistered broker-dealer, was he a finder, and there was laws coming into effect that were regulating them and making a lot of people liable. The crowdfunding exemption, yes, it's $4 million in the preceding 12-month period, and you do have that exemption, and you have it as to unlimited investors, which I'll get into in a second, and what their qualifications are. But it brings a new notion, a new term into securities law. They called it a funding portal. We call it a crowdfunding intermediary. Mm-hmm. Basically, everything goes through the crowdfunding intermediary. Congress, in its infinite wisdom, did not want the issuers, the companies, to be the one disseminating the information. They wanted a uniform dissemination of information through the crowdfunding intermediary. This is completely new. But what this does is it brings up the opportunity, like we have seen in years past, of charlatans to get into the industry. Therefore, any company that's out there, any investors out there, has to look at the efficacy of the company and its people who are going to do the crowdfunding.
I don't think that money is agnostic, and I don't think investors are agnostic and just trying to maximize their return. If they did, it would all be algorithm computer based. We'd fill out an application and it would be submitted. But as small business owners, we know you can't take the dreams, you can't take the understanding of the market or the commitment to the product or the confidence in the team and boil that into a form and have that be understood. You know, our startup is more than that form, and investors have never gone with just that ROI form. It's what do they know about the market? What do they know about the business? What's their confidence in that team? They're going to be attracted to that which they know. And going back to Jimmy's brother, Warren, you know, he tells us, you know, solid investing is investing in what you know and what you use. And that's going to be the fantastic opportunity for crowdfunding. Is I have no idea what the Gucci-wearing money manager that's managing my 401k in Wall Street is investing. I have no idea anymore. But to be able to take a percentage of that retirement through a self-directed IRA and do crowdfunding in my local community, in my affinity community with businesses that I know and care about will give me that opportunity. Not agnostic, but completely evangelical to support that which I care about.
So similar question from a legal perspective. What are some of the obvious do's and do nots of raising capital?
Well, the statute is all-encompassing, so it's difficult. But one, of course, one do not is that the issuer, the company, cannot go out and actually effectuate a transaction in securities, can't sell its own securities. All it's able to do through its website, through mailings, whatever it may be, is introduce an investor to the crowdfunding intermediary. So it might be as simple as a link on a web page that says, if you're interested in our company, and it comes to crowdfunding, and Community Leader is able to accommodate all those investors. That's the one big. As far as the intermediary is concerned, unless he's a broker-dealer, a licensed broker-dealer, cannot receive transaction-based compensation, which is commissions or any kind of compensation that's predicated on raising money. So you have that limitation. So that's a don't. The do's are the types of information that we provided, one on behalf of the intermediary and then on behalf of the issuer. And as I said, the issuer are things like use of proceeds tables. You've got to provide those. The financial statements. You're going to have to provide risk factors, certain risk factors, dilution. You're going to have to disclose your capitalization table. Very similar to what you find in a private placement memorandum today under Rule 506 or Regulation D. Similar type of information, but more limited. So it's not going to change the job of securities attorneys or the securities industry as far as disclosures, but it's actually making an objective standard as to what's disclosed.
And I'm Michael Hutchinson. We're talking about equity-based crowdfunding. We invite you to join our conversation. Send us your questions using the chat widget located just below this screen. I'd like to take a few questions from our audience. The first question comes from Kathy Paper of Rock Paper Star. Hello, Kathy. Kathy asks, if I want to raise money for my business via equity-based crowdfunding, do I need to have audited financials? Who'd like to take that question? Do I need audited financials?
Well, we mentioned it before. You only need audited financial statements if you're raising in excess of $500,000 to $1 million.
And the second question comes to us from Alice Berry. Alice runs a business called Entertain the Idea. And Alice asks, what are the ways I can connect with the crowd? What are the ways I can connect with the crowd?
So prior to the raise, as you're preparing your business, you're going to use the traditional social medias to build out your target market. We're going to work with you to identify who's the target market of investors are. You're not going to talk about your raise. You're not going to talk about the fact that you're going to do a raise, but you're going to build that community of support, that social capital, build your leadership position in those communities that you'll be able to convert over to financial capital. After you launch the raise, it is absolutely critical that you do that in a compliant platform through the proper channels. And all of the rules about that aren't set up, but what we know is that you'll want to do it within a transparent, controlled, and audited environment. So we've built our matching engine so that you will be able to communicate and share your story in a proper way, in a regulated way, to reach out and not put yourself at risk, and at the same time be able to effectively tell your story.
And the third question comes today from Heidi Gazelle. She's the president CEO of Bank Cherokee. And Heidi asks, after I sell stock in my business to raise funds, what reporting obligations do I have to the investors of my company?
So there's two levels of the reporting requirements. The first are the reporting requirements to the SEC that you mentioned, the annual reports.
That's correct.
Through our investor services, we'd like to go beyond what's legally required and recognize that these are new business partners. These are people that co-own your business with you, and that regular periodic reporting through a board member, through an investor advocate is going to be absolutely critical. So setting up and using a platform to maintain that ongoing investor relations might not be an SEC requirement. It's certainly going to be one of our requirements, and it's certainly a best practice for any small business owner that's had a group of investors.
My name is Ed Janicic. I set myself up as a limited liability corporation, and I am an independent contractor, also a semi-professional poker player. And my question really focuses on investors. You're focusing on the individual owners of the organizations, and I'm curious what responsibility or role you see in playing to make sure the investors understand the risks they're getting into, because I think you're dealing with a lot of relatively unsophisticated investors potentially. And then what can you do to help them understand and accept the risk in a learned way so that they know what they're getting into and they know they may lose their money as well as they may make something out of the deal?
There's going to be two types of crowdfunding investors, and our platform is meant to support both of them. One is that supporter like of the Green Bay Packers. That's an affinity. I want Sonny's ice cream to be able to expand. I want that Ace Hardware to be able to continue to stay in my community. I want to ensure that a pharmacy can move into our rural community. And the expectation of a return is far secondary to the affinity relationship with the business. And we're going to make sure that on the front end, every single one of our investors has been qualified, that we know exactly legally how much money they have that they're able to spend, that they're not spending more than that their source of funds is clean, and that they have gone through kind of educational videos live right on a mobile app that they have, or on the computer that interface with us to have that discipline. The other are those that are making a strategic investment. These might be when the units of sale are not $200 or $300, but are $2,000 or $3,000. And they want to make sure that this incredible money management platform, Moneyability, is able to come to market and is able to transform the wealth of families and get them out of debt and really build long-term wealth. So these investors that are committing to Moneyability really do want that option. And we're going to make that possible through not just the minimum required disclosure documents that the SEC will require, but far more expansive scope of information, requiring there to be an exit strategy for all of the businesses on our platform. May not be required by the FCC, but we know, based on our experience over the years, that as an investor, if there's not an exit strategy there, we're really putting our money at an unrealistic or untenable risk. So we've built this ecosystem to kind of support both, because that's the environment that's needed for the market to grow. both kinds of investors, the ones that are doing it as a pure affinity play and those that are making a strategic investment in the growth of a business.
Investors find deals. They hear about deals. A couple of years ago, 4 or 5 years ago, Ameritrade and E-Trade came out with the ability for some of their investors to get in on IPOs. They say it's only the people who have a lot of money, who are great customers, of Merrill Lynch or whomever, they're the only ones who get on IPOs. So they got a position, and everybody clamored to get the IPO stock. Another area now with this particular act is people are looking at small businesses, startup businesses, and say, geez, that might be the ability with a small amount of money to make a huge return. They're going to want to get in on these businesses. So I think you're going to see a tremendous amount of that money trying to access ownership interest in these companies. So I think it's going to spread. I can't tell you, I've talked to the California CPA Society, gave a speech on emerging topics in securities law, and this was one of the topics. And it was amazing how many of them came up to me and says, I've got so many clients that are asking me about crowdfunding. They're there. I've had wealth planners come up to me and say, I have customers, what is this thing? They have no idea what it is. So it's coming out of the woodwork, and it's going to continue to come out of the woodwork.
It strikes me that these small companies who are going to have sizable numbers of investors investing very small dollars is a formula for a disaster. From two perspectives. One is, if you have 500 investors, you're going to have 475 questions per week. And secondly, it doesn't seem to meet a fit for the small business model, sort of the permanent small business, the ice cream store you talk about. There's not enough return there to provide liquidity or buy people out. It would have to be, it seems to be, an affinity investor. Somebody putting together a company that's going to grow, affinity, strategic, whatever it is. So my question is, how does this really work when you're dealing with that many shareholders?
Okay.
Well, first of all, one of the provisions in the law was to exempt registration as a public company. So you exempt out these particular shareholders, so they don't count in the number of shareholders in that particular test. So they put them there. You also have the ability to have a shareholder agreement, put that in. I have not seen anything about inclusion of a voting trust or not. And that was the question that you had asked before. So you could use shareholder agreements and voting trusts and all that. The only information requirement you have under the statute is an annual report, annual financial statements being sent out. There are no others. And I would imagine that if a company started to have communication problems, we would have to develop a blog or something that they could ask questions. Certainly you don't need the operators of a particular company to answer questions all the time. So I think it's doable, and I can defer to the technology people.
Well, yeah, Mark, this is one of the absolute critical questions we've been talking about from the very beginning, and that's the reason for our platform. I mean, the communication issue, the nightmare of having 250, 500 new partners in your business here. And the point is that we believe the whole purpose of Community Leader was that we have a platform that it's an ongoing communication, venting, public affairs, public relations. That's all part of our package. We want full transparency. You can't even get on our platform, and we're not going to push your raise if you're not going to be regular monthly financial statements, if you don't have quarterly reports. I mean, we want ongoing communication, newsletters. This is all part of being on our platform. And you know, from our perspective, we want companies that are willing to take that to step out and be transparent, be exposed, have a different type of leadership, because we talk about the community leader. I mean, you have to be a leader in your community. You're not going to be able to do this. You can't be you're not going to be able to hide anymore. And I believe that we're going to build some better leaders, some better companies in the process here, if they're going to be playing or working within our platform and our methodology.
You need to find some intermediary like community leaders, which we provide a disciplined approach, and we also provide the visibilities, all the information streams on a very supported by a group of professionals. So what we basically have done is we take away all the headache for you to deal with bunch of the individuals. We act as pure, truly disciplined, providing the correct information, as correct as we can get from the companies we represent, and give you a continuous information flow.
Community funding will not be right for every business. And they might get attracted by the buzz of it, and I hope that they don't get picked up by a charlatan company, that grabs some money from them and pushes them out and exposes their business. Because it won't be right for every company. If there isn't a possibility of an exit strategy, it's not going to be right. If there isn't a platform that provides ongoing investor relations services, it's not going to be right. Built into the CommunityLeader platform that we have is if you use CommunityLeader as the accredited intermediary for the exchange, you're required to sign a 24-month minimum investor service contract with us, where we have a professional on your board representing the interests of those shareholders and communicating on a regular basis back to those shareholders. The shareholders are communicating through our platform to that person, so that you can continue to run your business and not be spending all of your time talking to all these other folks. It's part of the design side of if your business really wants $100 or $250 investors, or if the minimum unit that you will push through your raise is $2,500 or $5,000. That'll still be an option so that you can target market your investor pool to match what your business capacities and needs will be.
Scott, tell us about CommunityLeader's Campaign Manager. What is it specifically? How does it work? And at a high level, what are some of the benefits and advantages to a business owner using the platform?
Well, Hutch, the core platform is for businesses to basically manage the crowdsourcing pre and post process. It starts from the very early stages of setting up the process of doing the matching with the investors. There's a bunch of tasks that are attached to it. We have a program with 101 points that you have to accommodate to have an extremely successful campaign, and it keeps you on task with the process. And then eventually, when you're ready to do the launch, you file the documents to the SEC. There's a 21-day waiting period, and at that point, we can launch the platform. Once you've been approved, you can launch the campaign. And then we help track all the documentation in the back end. We do the communication with the investors and handle all this kind of stuff. Now, the reality is you can't touch the money. The businesses can't touch the money until they've raised 100% of whatever the raise was. So that's a big issue with where do you pick the number? I mean, that's an important thing. So it's a completely comprehensive turnkey program from start to finish. And again, we carry that process for 2 years.
The overlying platform driving the connection between the campaign leader and community investor is called Opposista. And Opposista is our matching and our management platform. Behind the scenes, our professionals and the lawyers and the accounting and the business professionals and the investment professionals are using Opposista to have a fully compliant system. The business owner is able to look at specifically the business owner information. The investor is able to look at their investment information, but behind the scenes, that matching, that transparency, that communications is happening. What we've done that I'm so excited about, Hutch, is that we've designed that Opposista platform to be a portal and a box for a local community. So if the San Diego Chamber of Commerce wants to support medtech investment in their local community and attract local investors, they can contract with our Opposista platform and put their own front end on it. And they will have a fully compliant back end to run a crowdfunding campaign. If there's a veterans-owned organization in South Carolina that I'm talking to that would like to be able to support driving specifically to the community of veterans-owned businesses, but they're business development consultants and it's a chamber and it's some interested they don't want to figure out everything that Rick knows about the securities law. They don't want to figure out how to interact with the broker dealer. They don't want to figure out that entire back end. We have that platform for them. And what's exciting about that is a business might come in through the South Carolina platform and end up being connected with an investor that came in through the San Diego platform. So we've been able to kind of blend both the hyper-local approach, which will really connect and match, but as people become engaged, they'll be introduced, they'll stumble upon investments that match their matching profile that they self-direct from all over the country. So together, those three applications, Campaign Leader, Community Investor, and Opposista, create a really vibrant, very compliant ecosystem for crowdfunding.
Can a business with declining profits qualify for an equity-based crowdfunding campaign?
Oh, absolutely. I mean, in our methodology of a community leader, we believe it's going to take about a 6-month process to prepare yourself for a proper crowdfunding raise. I mean, there's a lot of things to do. There's changes internally. There's leadership. There's if you're requiring audited financial statements. I mean, the documentation process. I mean, there's all kinds of things that need to be involved here. So as long as they can survive 6 months and wait for the funding and they're not cash poor, absolutely. There's not an
However, I will, and this answers one of the other question. I have 2 clients as examples. One is a minority woman-owned government contracting firm in Virginia. They were awarded a government contract to give them the ability to bid on telecommunications contracts, which entailed buying the equipment, the hardware, and then installation, doing the software.
That's great.
They are, 11 of the companies are huge companies, there's 9 small ones. They've got the best chance of getting a contract. This is a multi-billion-dollar potential contract. They went in there and won a $2 million bid, of which $750,000 was going to be to buy equipment. They don't have the money to buy the equipment, and they're scrambling to find money. You might say it's a 6-month process, but this is a company that has audited financial statements, has everything in line. They were public, they went private.
Right.
That type of company can come in and as an emerging growth business and get that kind of capital. That's the use of proceeds is to buy equipment to fund a contract. I have another client of mine who is in the screen printing business. Incredible, everything's automated. It's the most incredible thing you can watch. They got an order from Vans to print t-shirts. Vans was printing in Peru and they found out the fabric coming back had pinholes and there was no quality control. So they wanted to do it in the US. So they go there and they get this PO and they go to their bank with the PO and the bank says, I'm not going to fund your PO. And they said, well, get a letter from Vans and maybe a letter. No, we're not going to fund this. Perfect opportunity to crowdfund. Again, they have audited financial statements. They are ready to go. And I think in our particular system, they would score high and be available very quickly.
Yes.
And that's what's so great about the model that you all helped us develop, which was that there's these 10 areas, each with 10 points, 10 little tasks that need to be done in compliance and legal and marketing. And a company like that is going to have 99 of them done already. And it's just going to be that final, and it won't be 6 months, it'll be 22 days. 1 day to put it all together and get the agreement with the broker-dealer, and then the 21-day filing with the SEC. The trick is that we need to prepare companies to do it right in whatever stage of development they are, use an accredited intermediary, and do it at a time that the SEC says thumbs up, we're ready to go.
Businesses, especially emerging growth businesses, have not had the access to capital. And if they did, whether it was SBA or a bank, they don't have that. So they had to go to angel investors, which were difficult to find, very time consuming. They try to go to a broker dealer, and just to get into a broker dealer, it would cost a due diligence fee of $25,000, $30,000, which they didn't have. So their access to capital was negligible. With this, the access to capital opens up. And the other part was when a company went out to raise capital, many times you had this group of people called unregistered broker dealers. They call themselves finders. And I won't go into the law based upon that, but it is something that's been regulated by the states very severely over the last 10 years. So from that standpoint, you're going to be eliminating these sort of middlemen that aren't licensed. And all of a sudden you have a crowdfunding intermediary that is licensed by FINRA, is licensed by the SEC, and therefore it's a lot more viable an alternative for someone to raise capital. So I think it opens the doors incredibly and gives the small business owner and the emerging growth business owner the access to capital.
Jennifer, why is crowdfunding so important for women?
I think we have been all talking about it just because open up the access, and you can reach the people, places, companies that you don't know and you never known before. And you have a platform to let the whole wide world know what you're doing, which is internet is sex blind, I guess, so that's a good thing.
Sure. And what's the biggest misperception of equity-based crowdfunding that you'd like to address?
From my perspective, I think the misconception is going to be my initial misconception. And it was, this is too good to be true. You know, I can access money out of there. And then I started thinking, well, who's going to be in this? And I think back to my days in telecom when it first was emerging in the early 90s. You had every charlatan, convicted criminal that was in the space. So I started thinking, this is going to be something for them. In fact, we were discussing a potential competitor that says, we're going to charge a 9% commission and we're not a broker-dealer. We're an intermediary. Can't do it. So that was my concern. But I think what's going to happen with the SEC having objective standards and filing with it, I think it's going to become a lot easier to access the capital. We are going to be organized. We have, with the objective standards, it makes it easier for companies to know exactly what they have to do.
I actually believe that crowdfunding money will not necessarily, it won't be easy money, and it won't be cheap money. It will be strategic money. It's not going to be easy to clean up your business and get all of this infrastructure right as if you were about to go public, because you kind of are. You know, that's going to be a lot of work for a lot of businesses. It's going to take a lot of time. And then there's going to be the reaching out and getting the, you know, the follower base on the internet, that this social capital that you'll be able to convert to financial capital. It's going to be a lot of work. And our platform will be able to help a lot. But it's still, it's not that you can just post a Facebook page and cash a check for 250 grand. There's going to be work. But it's going to be a strategic play. For businesses that have a strategic reason to open up and engage their community, a community that is now not just the customers, not just suppliers, not just the community members looking over the developer's shoulder at what they might want to build on the corner, but they're actually vested partners. It's going to be a lot easier to grow that new product when there's people already engaged in a sense of ownership for its success. It's going to be a lot easier to build that corner development when the community is already vested in the success. You know, and I think that's what's exciting is, and that's what the misconception that we'd like to break through is that this won't be cheap, it won't be easy, but it's an incredible strategic opportunity for growing your business.
To get the economy back on track and generating jobs, America needs a strong and vibrant small business community. If entrepreneurs are going to participate in the economic recovery by seizing new opportunities, growing their businesses, and creating jobs, they absolutely must have access to capital, the lifeblood of their business. I feel strongly that equity-based crowdfunding may completely revolutionize funding for startups and existing businesses, and that the entire structure of angel investing may change in favor of the entrepreneur and general public. With equity-based crowdfunding, you set the terms of the deal, the stock price, the stock rights, and so on. And when you work with angels, it's usually the opposite. Angels typically set the terms of the deal. So in my mind, equity-based crowdfunding really levels the playing field. And there's still much work to be done by the SEC in order to figure out the details behind equity-based crowdfunding. The good news is this is a great time to educate yourself about this opportunity. Start the process for a crowdfunding raise now. Don't wait. Prepare your business to get funded. Do not hold back. Be one of the first movers in your market. I'd like to emphasize a couple of points Joseph said. And number one, equity-based crowdfunding will not be cheap money. It will not be easy money. Raising money from a community is a strategic opportunity. It's an opportunity to build a tribe of customers, an evangelist. It's an opportunity to firmly establish your business as an authentic community leader. And on behalf of all the good folks who work so hard with us to make this program happen, thank you for being here. We hope you enjoyed our show. I'm Michael Hutchinson. Now get out there and keep making things happen.